as he helps people like you not only clarify your financial goals, but to invest with military precision to achieve them. Listen in for mission-focused financial planning and disciplined investment management strategies that will help you turn your dreams into reality. Now, it's time to strap in and prepare for takeoff as we kick in the afterburners for today's show.
This show has one mission: to make your dreams reality. I'm Steve Ankerstar, and I'm On Time, On Target. Welcome, everyone, to On Time, On Target Financial Thought Leader Series. I'm privileged to bring to you today Scott Schneidermann, who is the CEO and president of Frontier Bank and a fraternity brother of mine. So we've known each other for a long time, and I think he's 1 year ahead of me in school, so he's also kind of a mentor when I needed it the most in my younger years. And we've kept in touch throughout the years, talked some flying stuff because he's also a pilot, like you heard from his bio. And then he's off to, into the banking industry and been a longtime banker. So I'm excited to hear what he has to say. And you guys, hopefully I'll ask the right questions so you guys can learn from the presentation today. And with that, Scott, let's go ahead and get started by giving us some of your backstory, maybe from all the way up through college.
Yeah, well, thanks for having me on, Steve. This is really kind of a treat. This is my first opportunity to do a podcast. And so you have to kind of excuse me if I don't do it quite right, but I'm going to do my best. You'll get my best effort here. Like you said, we got acquainted or got to know each other at Iowa State. As a matter of fact, I'm we have the term clone to the bone. I think that's something that we talk about at Iowa State. I can actually say that's true because I was born in Ames, Iowa. Born at Mary Greeley Hospital. My dad was a graduate student at Iowa State when I was born. So my journey from to Iowa State kind of started in Ames and ended at Ames. Followed my dad around. I'm a second generation banker. So I followed my dad. We had a job in a kind of a regional bank in Iowa. We moved around to some different small towns around Iowa as he kind of built his career. Ended up in Rock Rapids, which is in the far northwest corner of Iowa, right by Sioux Falls, South Dakota, where I went to finish my high school career, Central Lyon High School, proud alum of Central Lyon. Graduated and went off to Iowa State with really kind of a blank slate. There's a lot of college graduates I'm sure can relate to that. Not really sure what you want to do at that stage of your life. You're just kind of going out to try to experience things and figure it out. My path actually led me, of all things, to German language and literature first. And we have a German heritage in my family. My father grew up speaking German, was the first language he learned. And I desired to kind of learn more about that and enjoyed German language and literature. My fourth year of college, had the opportunity to spend abroad. I studied at the University of Hamburg in Hamburg, Germany. So that was quite an experience back then. It's hard to relate to that today too, because today you have Facebook and text messages and all the different kinds of technological tools. Back then I got to speak to my parents every other week on Sundays, and it cost $1 a minute to talk to them. So my dad would spring for 20 minutes. And I had to have all my stuff kind of written down, ready to go, so we could go back and forth. And even on the kind of a transatlantic call like that, you'd say something. It was very easy to step on each other because it was kind of a delay. So that was a really good experience. I came back thinking maybe I'd end up being a German teacher somewhere or going into international business, something like that. But after I thought about that a little bit more, I decided that I wanted to take my business interest in a different direction, following my father's footsteps and get into banking. So I got a degree in German language and literature from Iowa State, but then stayed on for another year to get my finance degree.
Yeah, very nice. I remember our fraternity house. It seemed like everybody was either engineering, finance, or architecture. So it was pretty good bunch of smart folks there. So. So after you left Iowa State, then, second generation banking, that's clearly an easy path into a banking job, right?
Yeah, no, one would think, Steve, and I did too. Back when I graduated from college, I had my finance degree in my hand, showed up at my dad's doorstep and said, "Okay, Dad, you own the bank. It's time for me to take over. It's time for me to kind of have you step aside and let me be the banker. And
Right.
the first thing I remember, the first thing he told me is that he wasn't going to hire me. And I said, you got to be kidding me. I went to 4 years of college and I got my degree and I got my whole life oriented around trying to become a banker, and you're not going to hire me. He said no. And what he wanted me to do was to go get an experience somewhere else. He wanted me to go work he didn't care whether it was in banking or if it was in something else, but to go get a job somewhere else, have a different boss, have some success before I came back to our family company. And that's as I've come to learn over the years, that's a common thing among family businesses. There's one of the dangers is that if you just kind of give it to somebody, they don't have to work for it, your success rate isn't near as high as if you go out and get some experience and establish yourself as somebody who's had some success outside the company. Both from just kind of managing the business, but then also just inside the business, having some credibility with your coworkers. If you don't do that, then your coworkers will look at you as dad's kid, and that's the only reason why you got the job. So, in hindsight,
good. So what'd you end up doing there as you bounced around before Dad would hire you back?
Well, of all things, I worked for another bank. I worked for a competitor of ours. Wasn't a direct competitor. It was down the road in Sioux City, Iowa, Security National Bank. I give them a lot of credit. I learned a lot working at that bank. I got exposed to a lot of different areas and departments, and just got a real good foundation for my banking career. Eventually, a job opening came up at our family business, and then I put in my application, and lo and behold, I was hired.
Okay. So when you started in at your the family business bank, first of all, tell us about the bank. We were talking earlier, big bank versus community bank, and you kind of made very clear there's a distinction there. So talk about the dynamics of a community bank.
Yeah, so a community bank, we live and breathe our community. I mean, there's no doubt about it. A bank is we're investing. Some people think of it as making a loan. We can think of it that way too, but we also think about it as investing in our customers. And so that by extension, you're investing in your community. So if your community does well and you prosper, the bank will do well. If your community doesn't do well and you don't prosper, the bank won't do as well. So we're really tied at the hip to our community. That's something that really was brought home to me in the Great Recession. That was kind of a banking event. And I really got to learn the difference between a large money center bank. There's in this country now, there's about 4 of them left, but a large money center bank versus a community bank. Matter of fact, Steve, on your tax return, on your tax form, there's a spot where you get to put occupation. Prior to that, I'd always just put banker. I thought it was a generic thing. But after I kind of came to that realization, I started putting community banker in there. I'm not really sure. I'm not sure if anybody at the IRS ever gets to see it, but it does something for me.
Well, there you go. As long as you feel better about yourself. That's funny. Now inside the bank, did you do all the jobs, I assume, from teller to, I don't know what the jobs are, but loan officer, is that one where you'd spend a significant amount of time where you're analyzing, you talked about investing in the community, where you're kind of looking at their proposal and kind of seeing if this is giving it the yay nay on whether they're going to get money and this is a team win for everybody?
Yeah, the yay is a lot more fun than the nay.
Right.
but yes, I can honestly say I've done all the jobs. I think all the jobs, probably including janitor at the bank. Some jobs don't even exist anymore. I mean, we used to hand sort all the checks. I mean, they would come in big boxes from the Federal Reserve Bank, and we'd have to like if you had an account at our bank, I'd have to sort your checks into the check file by account number by hand. And then when we were doing your statement, I'd actually have to count up all the checks to make sure that we had the right number of checks for Steve's statement, and we all put that all together manually, and we sealed it all up. And so those jobs don't even exist anymore.
Right.
But I've done most everything.
Well, good. And, just thinking some scenarios there for in a community bank, when you're a loan officer, maybe a big banks are this way. I've really actually never gone in for a loan in that sort of manner. When you tell people no, is it a kind of a hard no, or is it a come back with plan B, or does it depend?
Well, a hard no is just not a very good idea. So, well, I try to avoid hard no's.
Right.
That's kind of a bad idea. So there are 1,000 ways to tell somebody no. I find that it's a lot more productive to try to coach people or try to say, I could do this loan if it were this, or if you did this, to give them kind of a path to get their application in a place where I can approve it, rather than just saying no.
Okay. And to kind of transition to some inside banking stuff, if you do say yes to, so say you're a frontline loan officer in a bank, whether yours or another one, says yes to a loan, do they have to give that a hold on, let me go check with a superior, or do you have the authority as a loan officer in a bank to actually cut that, or is there a monetary value associated? How's that work?
Yeah, so that's a great question. We're governed by a board of directors, so we've got a local board of directors, and the board with management comes up with a loan policy. So we decide what types of loans we want to do, what kinds of loan to value, what kind of debt coverage ratios we want, what kind of credit scores, all those things get put into there. And our lenders have delegated lending authority. So they have the ability, like if you're a kind of a mid-career lender, you might have a $500,000 secured lending authority, meaning that you could make a loan up to $500,000 if you've got collateral and if it meets all the conditions of the loan policy. Now, if you want to make a loan that's over $500,000, or it short on collateral, or it doesn't meet loan policy in some way, then that's an exception. You'd have to either go to a credit committee, or you'd have to go on to a senior manager to get that approved.
And in that case, is that a quick process, or is that
that's a softball question. That with a community bank, we really pride ourselves on quick turnaround. That's one thing that we can do that the big banks can't. So we try very hard to get that turned around on a really expedited basis. And one other thing too, I think just from a business practice, I don't know, if your listeners would be small business people, but our philosophy really is that a group decision is not better than an individual decision in every case. We really believe that having loan officers have delegated authority and that they make individual decisions that they're accountable for, that's a better system than actually getting together with a credit committee every time and coming with a proposal and then trying to make a group decision. You can get caught in group think, so.
Sure. And while we're on the subject of loans, it's kind of skipping to the end of the, a big long timeline we could talk about. But when you jump forward to COVID-19 and the CARES Act and the EIDL and the PPP loans that came out, what was that experience for you guys? You kind of hear from mainstream media that the banks weren't given a lot of guidance, but they were told to go make it happen. Where's the guidance? Well, there's no guidance. Just go make it happen, and we'll figure out the guidance later. What's the inside banking story there, or what was your experience?
That's a fun question, because I've got a really good aviation analogy to it. But first, I want to say that I was sitting on my couch watching a press conference with President Trump and Treasury Secretary Mnuchin. I think it was on a Tuesday, but don't quote me on that. It was early in the week. And I heard Treasury Secretary Mnuchin, they're our primary regulator that we flow up through the Treasury Department. He said that on Friday, this is like a Tuesday. So on Friday, you'll be able to go into your local bank, apply for a PPP loan and get it approved and get it funded that day. And
I remember that.
At that time, I about went boom right off my chair, because I said we don't even know, we don't have
What's
anything.
That guy talking about?
Yeah, we don't have anything. So in one way, I think it was a brilliant strategy, because they immediately got a workforce, a national, coast to coast workforce that was familiar with working on loan applications, familiar with working with government regulation. So I think it was a brilliant thing to engage the private sector. It's something that the Trump administration, I'm not trying to be political, I'm just saying they engaged the private sector in a lot of this, which I think was a really smart thing to do. But I definitely felt like, I was in the vice or we were kind of in that vice or in that fulcrum because all of a sudden we knew all those customers were going to be coming to us
Right.
on Friday with that expectation. They almost created a gold rush to come
Right.
to
Yeah.
the bank, and we didn't know what to do. So my analogy for you is my aviation analogy. What I felt like it was you got dropped out of the sky at about 40,000 feet with all the parts and instructions to build an airplane. And your job was to, before you hit the ground, to get that airplane put together and started so that you could fly off into the sunset. That's what it felt like with PPP. It's like you knew kind of what they were trying to get done, but as you're falling through the sky toward the ground, we didn't have a lot of the rules, and our customers really, it definitely created a gold rush.
Yeah, I do remember that. I want to say that was March 9th was the Tuesday, and then March 13th was, I think, the Friday where that big announcement was made. And I'm trying to educate clients as well as to, so I'm on the SBA.gov and looking at what these, the only guidance that came out and trying to sort through all that to help folks out. But you're right, it was. I was actually very impressed with both the Federal Reserve and the Treasury Secretary, how they handled all that. But draconian measures for sure. So it's kind of like, whoa, from an impact level. So did you think, you'll probably answer yes, because I guess I am softballing a question, but a community bank in that situation, do you think you're able to be a little more nimble than maybe a bigger bank, or not really, you're all getting the guidance at the same time, so it kind of doesn't matter?
In that case, there were two things that really benefited us at Frontier Bank. One is that we were already an SBA approved lender. At the time that PPP got kicked off, there were about 1,800 lenders in the country that were approved. They're already approved SBA lenders. And to put that into context, there's about 5,000 or 6,000 regulated financial institutions, like banks like us.
Okay.
So there was somewhere around a third of those institutions were pre-approved as SBA lenders. So that was one thing that really helped us. And then the second thing, to your question about whether being a small bank or a big bank, we were definitely nimble in the beginning, and what it has to do with is that big banks, they're more automated, they're more transactional, and so they don't really think about somebody actually sitting at a keyboard and keying in an application. What they want to have is systems that have the data just flowing through the system and automatically interfaces with SBA. So those first few days of the PPP lending experience, we were getting customers coming from larger banks because the larger bank was telling them that they weren't ready, or that they didn't want to deal with a small business, or whatever the case may be. They ended up on our doorstep, and we helped them. Now, after 3-4 days, maybe a week, then you could tell that the big banks had figured it out, and then they're very fast. I mean, they can really move stuff through. So
yeah, I kind of want to remember. I think Bank of America was the first one to at least publicly say, "Doors are open. We do it. We actually know what we're up against." During that time, I also heard that the funds were running out. Obviously, so do you get an allocation when something like that's announced? You get $1 million to put towards the PPP loans, or you chop the loan and then you worry about the ringing the register up for where the money comes from later? How's that work?
You're way too analytical and structured in your thinking. It was more of a food fight, Steve. I mean,
okay. All right. Well, that's good to know.
It's kind of a free for all. And there's 2 rounds. There was the first round and then the second round, both about the same size, a little over 300 billion apiece. The first round was definitely a food fight, and early on we had an advantage. But then as the big banks figured out their systems, you could just tell they soaked up a lot of the capacity very quickly. Matter of fact, toward the end of the first round, they still hadn't produced. For a lot of our customers, we work with smaller businesses, sole proprietors, farmers, those kinds of people. And we were getting updates from the SBA about how much money was left, and I could tell the money was going to run out. And so I was concerned about it. Called our congressman just to say, hey, in that second round, I think we need to make sure that there is some allocation, because Otherwise, I think the big banks are just going to hoover this all up, and you're going to have a big problem because sole proprietors and farmers in particular, they haven't been given the instructions yet. And if they get left out in the cold, from a political standpoint, that's a big problem.
Right. And those are the folks that were supposed to be being targeted with the program. Everybody was targeted, but certainly the sole folks out there and the kind of folks out there on their own. So, absolutely. Okay. So thanks for that insight. And again, more and more technical banking questions. So, it seems like every town has more than one bank, right? So I suppose you have to have competition, but talk to us about how banks make their money and how that's maybe changed over the years with technology.
Yeah, we're still pretty traditional. I mean, I think we are still kind of Big Ten football. We're, what is it, 3 yards in a cloud of dust or something like that. We're blocking and tackling. We're pretty traditional. So we make loans to local business people, local real estate investors, homeowners, farmers, that kind of stuff. And we gather up deposits primarily from our local markets to do that, to fund that. One of my jobs at the bank is to manage our fixed income portfolio. So we do buy typically agency MBS or municipal bonds. Okay. So that's something I spend. I'm kind of a geek about that. I spend quite a bit of time on.
All right, I like it.
Analyzing fixed income stuff. But we're pretty traditional. So we basically earn the spread. We charge you 4% on your loan, and we pay the depositor 1%, and we get to keep the 3%. And then as a bank, what you really have to watch out for, in baseball, if you can hit over 300 as an average in baseball, you're considered to be, you're probably Mike Trout getting paid $430 million.
Right.
In banking, you have to hit it's like 3 nines. I mean, you gotta hit. You can't miss very often.
Gotcha.
So you really have to manage that credit expense. You can't make bad loans.
Gotcha. And then do you guys ever, not to get too personal, but do you sell loans like mortgages, or since you're community and you loan to your neighbor, are you really keeping that loan on your books and they pay that the whole time to you? Or it depends?
Yeah. I would say that predominantly, probably 80-90% of our loans are on our books. We own the loan and we service the loan. There are some occasions when that's not true. The big one is most people. We've gotten the American people pretty conditioned to having a 15 or 30-year fixed rate mortgage.
Right.
That's not something the bank really is set up to deal with. We've got our liabilities are shorter term liabilities. So in terms of interest rate risk and trying to match assets to liabilities, we have to sell that to Fannie and Freddie.
Okay.
So we'll sell the loan off to Fannie and Freddie, but we'll retain the servicing. So we get the customer can still make their payment at Frontier Bank. We can, if there's a problem, that's when really the value shows up, is if all of a sudden there's a problem, or if there's like in this COVID-19 situation, we've got a few customers that are out of work, and they're that way we can work with them directly. They don't have to work with some out of town or out of state servicer through a call center. So we can handle that type of thing directly. So that'd be one case. And the other one is that I would say is if a loan gets to be a larger loan that's over our loan to one borrower limit, then we, just like an insurance company with reinsurance, we take a loan and then we sell a loan participation to another bank. It's just it's a risk management tool, spread some of the credit risk around.
No, that makes sense. And then thinking of all the money that's moving around every day, and the casinos, which are kind of probably a movie thing, but they're balancing their books every half an hour, and the CEOs walking the floor. What as far as managing, and I probably know just enough to be dangerous with how it all works, but the electronic transfer of funds and managing reserve levels electronically, I think I kind of get that. Is that something that's managed throughout the day, or is everything kind of balanced at the end of the day? And then the second part of that is the same question, but in cash. And I don't want to be too nosy, not like, I don't want anybody to get like inside information on you, but as far as whatever cash level you have, and somebody walks in from the ranch and says, I want 50K in cash, and, you'd put a big dent in the old cash pile. How do you get cash back in your vault to square that out and, manage the balances, if you will?
Sure. So what I would say to you is that cash has become, in my banking career, I've been in banking for almost 30 years now, and cash has become much less relevant than what it was when I first started. People have been become way more accustomed to electronic transactions, whether they're ACH, wire transfer, debit card, bill pay checks, any of that stuff is kind of electronic settlement. But we do still have to have a fair amount of cash at the bank. Usually there's cash out at the teller window that just handle normal transactions that we encounter during a day. There's a vault cash that we keep back in the vault to kind of protect it from thievery.
Sure.
but yeah, so if we have we were preparing for that ahead of the coronavirus COVID epidemic. We were preparing for that ahead of time and built up our cash levels. We thought that there would be a good chance that some people might come into the bank at the beginning of the crisis, and they just feel good. Just to them, that gives them a little bit of, it's like a security blanket if they can just have the cash in their hand.
Yeah, absolutely. I honestly, I went and got $500 when I was like, okay, let's just start taking some personal protection action. And for some reason it was like, let's grab some cash before the banks close and don't reopen in 3 months or something crazy. So run on cash. So, all right. So what else was going on there?
And so anyway, when we want cash, I think your question is like, if
yes.
When you want cash, you go to the bank. If a bank wants cash, where do they go? And if you pull out any bill you've got in your pocket, it's going to say a Federal Reserve note on there. So the Federal Reserve Bank prints the money. And so what we either need to do is go directly to the Federal Reserve Bank, or we actually work through a correspondent bank. And the interesting thing is, the correspondent bank we use is a competitor of ours here in Sioux Falls. So while the public sees maybe competition, the truth is there has to be some coordination on the back end of things to make everything work. And
sure.
we're better off coordinating and working with each other. So we just literally, we do, just like you do, we just call a correspondent bank and say, instead of saying I need $500, we're probably saying I need $500,000 or something, and then we distribute it out to these branches according to what the need is. And typically, though, it isn't so much that we need more money, because we're also doing. I mean, we're bringing in cash, and there's cash going out all the time.
Too much money.
Typically, what happens is we've got too many 20s and not enough 10s, or it's more about trying to get. We're selling cash and we're buying cash.
And so obviously it doesn't just fly through the air. So do you guys own your own Brinks trucks, or is that all contract, that there's, one Brinks truck in your town and, that's what that person does all day long, or how does that work?
Yeah. So
or is Amazon into that business yet? Because they will be, right? So
wouldn't that be great? No, that's a service that is provided by the correspondent bank. So they contract with an armored car service that distributes out the cash. I believe it's the same way with the Federal Reserve Bank. If you order from the Federal Reserve Bank, they would deliver. They contract with an armored car service and deliver it. So it's not so much that you have to go and get it. It's that you pay for the delivery of it.
Okay. And you would incur that cost. Your bank would incur the cost of whatever that is, because it's your problem that's being fixed. Okay. That's probably
one little thing, Steve, on that point that I like to say is that I think years ago people worried. I mean, you kind of alluded to, and I don't want you to give up any secrecy or anything like that. It's pretty much open book. There's cash at the bank, but it's just not a good idea to come in with steal money at the bank, because that's a federal offense. But it used to be, people worried about Jesse James coming through the front door with his 6-gun, and he wanted to take the money from the bank.
Right.
That really isn't as much a concern today, because all the transactions have gone electronic and a lot of the access has gone electronic, bank managers like me are way more worried about cyber attacks or cyber threats than we are about somebody coming to the teller line and saying, "Give me all your money." I mean,
Right.
we actually that's kind of a long established practice. There's a lot of training that goes into what to do if that happens. With the cyber world, I feel like that's where the Wild West is these days. I mean,
Right.
Trying to figure out, trying to prevent any kind of a vulnerability or attack on that side.
Oh yeah, I mean, we've been talking about that for decades in the military. Same thing. Far more concerned with that. That's that sort of attack than a kinetic attack, where we know how to deal with that. So that's interesting, especially now with COVID-19, and those of us who believe the mask works actually wear a mask that's made to filter things versus the whole crew that's wearing bandanas around. There you go. See, an actual mask versus the bandanas, and of course, fashion statement, I think, more than anything. But everybody wearing bandanas to the bank, is that, I assume that would spur or has spurred some jokes?
You are correct.
All right, well, we'll leave it at that. Well, thanks for being as candid, and it probably took you right up to your comfort level as to how much you want to talk about cash on hand in banks. So I do appreciate that.
Sure.
So for everything that you've heard here, or for the listeners, for everything that you've heard Scott talk about, hopefully I asked some questions that help you get kind of an idea of how banking works overall. But Scott, what would you, if we have some listeners out there that are maybe in college, finishing up their finance degree, what would you advise either a younger version of yourself or a room full of recent college finance grads that are going into banking? How would you set them up for success?
Well, thanks for that opportunity to share a little nugget of wisdom. After, when you look back over the 30-year history of my career, there's a couple things that come to mind, and I'd love to try to help somebody else out to try to get through that process. Number one is, I believe that when it's kind of a cruel irony in life, that a lot of your big decisions that you have to make, you make at age 18 to 22, that kind of time frame, when
Right.
you have no experience, you have no, you just don't have any a view on the world yet. You just don't, you don't know all the experiences that are out there. Things like trying to decide, what you're going to do for a career, who's your spouse going to be, where are you going to live, who do you want to work for? All those things happen like right at the beginning. And so my advice would be on that front: find somebody that you trust, find somebody that has some experience. And as you encounter some of those kinds of questions, whether it's a parent, or it could be an uncle or an aunt or a grandparent, or a family friend, or just somebody that you trust, don't be afraid to go ask them, what would you do if you were in this situation, or what kinds of things should I be thinking about? Because I think there's a lot of wisdom, and it isn't that we have all the answers.
Right.
I mean, when you go through life, it isn't that you have all the answers, but that's a critical time in somebody's life, and you make it. It's just kind of ironic that all the big decisions you make in your life are right at the beginning.
Right up front, you bet. Well, if somebody's out there listening today and they say, "Hey, I want Scott to be my mentor," how can somebody get in touch with you or reach out to you if they do have questions like, "Hey, can I bounce an idea off of you?"
Oh, that'd be a lot of fun. I appreciate you saying that, Steve. I'm out on LinkedIn, so you can find me. I think I'm the only president and CEO of Frontier Bank, so I think you'll be able to find me on LinkedIn. So I track messages through there, or you can go out to our website at frontierbk.com, and then there's a contact us with a form that you can fill out, and that'll come to me, and then we can connect and go from there.
Well, gosh, I really appreciate that. And I thank you for your time and all the, you probably think it's just another day of talking about banking, but a lot of people don't know, how all that works. And even in the finance industry, I'm kind of fascinated by banks and money levels and all that stuff. So thank you for your time. Thanks for being a good friend for all these years. And thanks for coming on the show.
Well, I appreciate it, Steve. This is quite an experience, and I wish you well with your podcast. And I really appreciate you coming up to the Veterans Day program last November. I think that you did a lot of good with some kids up here in our part of the world, talking about your military experience, and I really want to tell you how thankful we are for your service.
No, it was my pleasure. So for our listeners out there, you heard from Scott Schneidermann, CEO and President of Frontier Bank. just a wealth of information. So hopefully you can take some of that and apply that to your personal lives. And thanks for listening. And here's to you meeting